Merry Christmas, Happy New Year, everyone. Happy Hanukkah. So I'm going to jump right into some data for you on our East Bay, and then I want to talk to you a little bit about next year. Right now, here in our East Bay, which East Bay is our 580, 680, and the 24 clip. It's a pretty broad area. Right now, there's 844 active listings, and there's 369 pending. Kind of past a couple months ago, so things are improving. A couple months ago, we had 1,496 active listings and only 497 pending. So things are improving. I'm going to show you some graphs that'll show you a little bit of where we're headed, or at least anticipated headed, no crystal ball. But definitely we're seeing improvement in a couple of different areas. The first slide I want to share with you is interest rates. Most of the media has been talking about where we're headed with interest rates. We've been on a downward trajectory the whole year. I mean, as most of you know, you can see from this graph, early in this year, we were almost 8% interest. Right now, and you can see this whole year it's been falling, we're down hovering just under 6% in most cases. Even on an adjustable rate mortgage, you can get low fives in some cases, depending on your relationship with your bank. So significant improvement with interest rates. So I want to talk with you about this one slide. It says here, the 3 reasons the housing market is likely to improve next year. Number one, of course, that we've talked about that. Interest rates have been on a decreasing for most of the year, and we're expected them to continue falling. I wouldn't be surprised early next year if we hover in the upper fives. I mean, my prediction in the next 12 months is we're going to drop probably where we were prior to COVID, which was low 5, right? Well, hope we'll see that. No crystal ball. The second point is as the lock-in effect eases, more homeowners are selling and inventory is rising back to normal levels. So a lot of the families were resisting moving who had maybe a COVID 2% interest rate, and then we were almost 8% interest rate. So of course, the resistance to move, as we're settling back, we're seeing more inventory. And it says here, lower rates and more homes to choose from are bringing more buyers back into the market. So we just think that 2026 is likely to be a bit of a more robust year. We'll see. Some of the data I want to share with you about our East Bay too that's been interesting, right? So the end of last year, the last 40 days of last year, during the months of November, December, there were 519 homes closed in our East Bay. This year, that same time period, we had 731 homes close escrow. So again, we're seeing an improvement in the overall market everywhere. And one data point that I thought was super interesting, last year there were only 21 houses in our East Bay that sold over $3 million. This year we've had already 40, and we still have a little time left. So basically what I would share with you guys, what we're seeing in the market is an improvement. I think that the start of next year is likely to see, generally speaking for home sellers, the most robust time, and we'll see how 2026 behaves. Mid-January to about the end of March tends to be the time where inventory remains again on the low side. Demand tends to be strong and high, and then in our area, we don't really have any bad times to make a move or be a home buyer or a seller. But I do think 26 is going to be more robust. I think buyers are going to have more homes to choose from and lower interest rates. Sellers, I think you're going to see a slow, I don't think it's going to be crazy like COVID, but I think we're going to see a slow upward trend in values. I'll keep you guys posted. If you have any questions at all, let me know. Take care. Merry Christmas. Happy New Year. Happy Hanukkah. See you soon.